J&J rallying 10% in the last 3 months. Morgan Stanley now thinks you should buy it. They upgrade the stock to outperform. Call the day, increasing the price target to 170. Stephanie Link, you own J&J.
I do own J&J.
Like this call?
I do, because I own it.
Still a lot of uncertainty out there, though.
No, well, I mean, I think the valuation is discounting a lot of the uncertainty. It's trading at a 10-year discount to historical average relative to the S&P. It's at a 15% discount to the S&P. I think underneath the surface, the fundamentals are just fine. So you've got this legal issue, and you have to actually decide if you want to.
This little legal issue.
Well, you do. Well, they also generate. They also generate 30 billion. They also generate 30 billion in cash a year, and they're going to appeal all of these things.
All right.
So that there is a legal issue, and that's why the stock trades where it does. But underneath the surface, the fundamentals are actually good. I mean, the pharmaceutical business is really on fire, growing upper single digits. Med tech is doing well. Consumer is okay. But I think they're going to do some M&A in med tech, and I think that their growth rate actually will improve. So, you know, getting through this legal stuff is going to be a battle, but I think it's lagged, and so I like the call.
I'm wondering if you're watching the program and you don't own the stock, and you know about the talc legal issues and the overhang with all that. If you say it's worth a risk to buy the stock here based on this call of the day, as we say, or there's just too much risk to put new money to work. I understand if you have money working, you're not going to give up on it. But what about the person who doesn't own it?
Well, I think the valuation is discounting a lot of the bad news, trading at a 10-year historical average low relative to the S&P. That's a big number, right? And if I didn't think underneath the surface the fundamentals weren't as strong as I do, then I wouldn't be buying it. But the fundamentals are doing very, very well. They've got a great pharmaceutical pipeline that I just don't think gets the respect. You're yielding 2.6%, great quality management, awesome balance sheet. And as I said, they generate 30 billion cash a year. They have plenty of money to pay for a lot of these settlements. And I just don't think you're going to see any settlements anytime soon in a huge number.
Yes, sir.
You know, I generally don't talk about stocks on this show, but years ago, James Grant, you may have read it, wrote a story on in his letter that said there will always be J&J. It is a fantastic company. We've owned it for a long time. We own it in our dividend portfolios. It's because of the quality, consistency, transparency of that dividend that they continue to provide. And they are diversified across pharma, med device, consumer products. If you had infinite time and infinite resources, you could not replicate what they have. They will be able to migrate through this, and ultimately it will continue to be a stock that we own in our portfolio.
I agree.
Go ahead.
I agree with everything that Rob said. I agree with what Stephanie said. If you don't own the stock, though, the problem is the visibility, the fact that they are taking a litigation position of appealing.
But it's working. The appeals are working.
Think about it in terms of stock performance. Not are the appeals working in the court of law. In terms of stock performance. If you don't own the stock, the position litigation-wise that they've taken that they're going to appeal, that's going to impede the stock from having the ability to gain momentum. I agree with you. It's a quality company. I love the medical devices component of this. They'll make an acquisition.
How about the consumer products?
They're across the board.
I think those are good points that
I think they are.
But
California jury yesterday dismissed claims in that particular trial, not all claims, of course, but in that trial, they dismissed those claims in that yesterday, as far as the talc and the cancer issue and all that. Now, that's a California jury.
There's still opioid overhang, too.
Yes, there is. And Teva and a whole bunch of others, you know, bear that responsibility as well. I think collectively, the opioid, these firms collectively get in and do that big deal.
You don't own this either, though.
No, I don't own this one. But I don't own a lot of these big drug stocks. Pete does. I don't. I'm a trader, not an investor. So I don't own it for that reason.
I think that's actually a really good point. I'm an investor, and I can wait 2 years, and I have a 2.6% dividend yield. And to your point, it absolutely does not have momentum. But when they do settle, or if they do settle, or when you get some sort of closure on this, the stock is going to do very, very well. Yeah. I just don't have the timing of that, right? I don't know that. So in the meantime, I think the valuation, it makes a lot of sense. And it's a quality staple-like company at a reasonable price relative to what other
Steph's a collector. There's brokers and traders out there. I think being a collector, when something presents itself, you hang the Picasso on the wall and you let it
Okay.
age.
All right.